Welcome back to Talk Tickers, where we, break down these earnings calls so you don't have to. Today, we're diving into Lennar's Q4 2024 performance. They just dropped their results and things got, well, let's just say interesting.
Interesting is a good word for it. It has been a roller coaster of a year for the housing market, and Lennar's latest report definitely reflects that.
You're telling me?
Yeah.
They missed expectations on both earnings and revenue, which always gets investors a little, jittery.
Rightfully so. Rising interest rates have really thrown a wrench into things impacting both consumer confidence and affordability.
So let's get into the nitty-gritty. What were the standout numbers from this earnings call? What really jumped out at you?
Well, the biggest red flag for me was the new orders. They came in at 16,895, which is significantly lower than the 19,000 everyone was anticipating. That's a pretty clear sign that buyers are hesitant, and it makes you wonder what the next few quarters might look like.
Yeah, that's a big miss and definitely something investors are going to scrutinize. What about their profitability? Did rising costs and those pesky interest rates put a dent in their margins?
Absolutely. Their gross margin landed at 22.1%, falling short of the projected 22.5%. To combat affordability concerns, they had to offer higher sales incentives, which averaged around 10.8%. That eats into profits, even if it helps move inventory.
So it sounds like they're trying to strike a balance between keeping sales going and protecting their bottom line, which is a tough act in this market. What about the number of homes they actually closed on during the quarter?
They closed on approximately 22,200 homes. But keep in mind, a lot of these sales were likely locked in at higher prices and lower interest rates earlier in the year. We might not see the full impact of the current market conditions until the next couple of earnings reports.
That's a really good point. It's like we're looking at a delayed reaction. So how is Lennar planning to navigate these choppy waters? What's their game plan for the future?
Well, they're sticking to their guns when it comes to volume. Their strategy is to maintain a steady flow of home deliveries, which they believe will help them optimize costs and be ready to capitalize when the market stabilizes.
It's a bold move, doubling down on their core strategy when things are uncertain. It's like they're saying, we're Lennar, and we build homes come hell or high water.
Exactly. They're projecting to deliver between 86,000 and 88,000 homes in 2025. That's an 8% to 10% increase over 2024. It indicates they're pretty confident in their ability to execute.
Those are some ambitious numbers, especially given the current climate. But it sounds like they're not just sitting back and waiting for the market to turn around. They're making some pretty big moves to reshape their business.
Right. Let's talk about the elephant in the room.
Yep.
The Milrose Properties spinoff. It's a game changer.
Okay, break it down for me. What exactly is Milrose Properties, and why should our listeners care?
Essentially, Lennar is spinning off a big chunk of its land holdings into a separate publicly traded company called Milrose Properties. It's like they're creating a separate entity to handle a huge part of their business.
So they're splitting the baby, so to speak. What's the logic behind that?
Think of it this way. Milrose will be managed by Kennedy Lewis Investments, a firm with a ton of experience in land development. Their sole focus will be developing home sites and then delivering them to Lennar just in time for construction.
Wait, hold on. Why would Lennar give up control of their land? Isn't land a home builder's most valuable asset?
You're right, land is crucial. But this move actually makes them more agile. By spinning off Milrose, Lennar reduces its asset base and frees up capital that can be used elsewhere. It also makes them less vulnerable to market fluctuations.
I see what you're saying. It's like they're saying, we'll focus on building the houses and let the experts handle the land part. It's a fascinating strategy. What's in it for Lennar's current shareholders? Are they getting left out in the cold?
Not at all. Lennar shareholders will receive 80% of Milrose's stock. So they're getting a piece of a brand new company that could have huge growth potential. It's a win-win.
Okay. I'm starting to see the method behind the madness here. But wait, there's more. Lennar is also making a major acquisition in this earnings call. Fill us in on the Rache Coleman deal.
This acquisition really underscores their new business model. Lennar is buying Rache Coleman Homes, which is the 21st largest home builder in the U.S. This adds about 100 communities to their portfolio and expands their reach into some really desirable markets.
So they're slimming down on one hand with the spinoff and beefing up on the other with this acquisition. It's a pretty bold, two-pronged approach.
Exactly. And here's where the pieces of the puzzle really come together. Milrose will actually be acquiring Rache Coleman's land holdings. It's a perfect example of the synergy between the spinoff and the acquisition.
It sounds like they're orchestrating a pretty intricate ballet here with lots of moving parts. Lennar is clearly not afraid to make some waves and shake things up in response to this changing market.
It's a fascinating case study in how a company can adapt and evolve in the face of challenges. They're acknowledging the current difficulties while making bold moves to position themselves for future success.
Okay, so we've talked about Lennar's earnings missed the impact of those pesky interest rates, their strategic spinoff, and that big acquisition. It's a lot to digest, and we've just scratched the surface.
We've definitely covered a lot of ground, but there's still plenty more to unpack, especially when it comes to Lennar's overall outlook on the housing market and where they see things headed.
That's right. So stay tuned, listeners, as we dive even deeper into Lennar's world in part 2 of our deep dive.
Welcome back to Talk Tickers. Let's pick up where we left off with Lennar and really dig into their perspective on the housing market's future.
All right, so paint us a picture. How is Lennar viewing this current market environment? Are they feeling optimistic, pessimistic, or somewhere in between?
I'd say they're cautiously optimistic. They acknowledge the obvious headwinds, persistent inflation, affordability concerns, and those fluctuating interest rates we keep talking about. But they're not panicking.
They seem to be taking the approach that, this too shall pass, which is pretty refreshing to hear. So what's giving them this sense of optimism? What are they seeing that maybe the rest of us aren't?
They're laser focused on the bigger picture, a chronic housing shortage and pent-up demand. Those are powerful forces that simply won't go away overnight.
So basically, they're betting on the fundamentals of the housing market eventually winning out, even if things are bumpy in the short term.
Exactly. They believe their focus on affordability, their strong land position, especially with the Milrose strategy, and their lean operational model will help them not just survive this storm, but come out stronger on the other side.
It's a compelling argument for sure. But let's play devil's advocate for a moment. What are some of the potential risks to Lennar's strategy? What could throw a wrench into their plans?
Well, one obvious risk is that interest rates could continue to climb higher than expected. That would make affordability even more of a challenge, potentially slowing down those new orders even further.
Yeah, those interest rates are like a looming shadow over the entire housing market. What else should investors be keeping an eye on?
The performance of Milrose Properties is going to be a key factor. Everyone will be watching closely to see if this spinoff truly delivers on its promise of unlocking value for Lennar shareholders.
It's like a high-stakes experiment. Will this new structure thrive and create a powerhouse in land development? Or will it fizzle and become a drag on Lennar? It's a nail-biter for sure.
And then there's the integration of Rache Coleman Homes. Merging two large companies is never a walk in the park. Investors will want to see how smoothly Lennar can absorb this new acquisition and make it a cohesive part of their operations.
There's always that risk of things getting lost in the shuffle during a merger. Culture clashes, conflicting systems. It can be a recipe for disaster if it's not handled carefully.
Absolutely. And of course, we can't forget about the core home building business itself. Margins are going to be a crucial metric to watch.
Margins, margins, margins. It all comes back to profitability in the end. If Lennar can't stabilize their margins and eventually get them back to pre-pandemic levels, they're going to face some tough questions from investors.
Couldn't agree more. And then there are the classic indicators of demand, new orders, and sales pace. These numbers will tell us a lot about the health of the housing market as a whole, not just for Lennar.
All right. Those are the bread and butter metrics that everyone in the industry is going to be watching like a hawk.
So there you have it, a mixed bag of potential risks and rewards. It'll be interesting to see how this all plays out in the coming quarters.
All right, so we've covered a lot of ground here. Lennar's performance, their big moves, the risks, the opportunities, the whole 9 yards. It's been a wild ride.
A wild ride indeed. But hopefully our listeners are feeling a little more informed about Lennar and the state of the housing market.
And now for the moment, you've all been waiting for our This Is Not Financial Advice segment. So let's say you're feeling a little daring and want to make a bold bet based on what we've learned about Lennar today. What's one outrageous but plausible trade idea that comes to mind?
Okay, if you're really feeling adventurous and you truly believe in Lennar's long-term vision, I've got a spicy one for you.
Hit me with it.
Consider a long-term call option on Milrose Properties.
Whoa, now that's what I call swinging for the fences.
Yeah.
Explain the thinking behind this wild play.
Think about it. If Lennar's gamble on a streamlined asset-light model pays off, Milrose has the potential to become a dominant force in land development. And as demand for new homes inevitably rebounds, their stock price could explode.
Okay, I can see the logic there. It's a high-risk, high-reward scenario, which is right up our alley in this segment. But remember, folks, and I can't stress this enough, this is not financial advice.
Exactly. We're just having some fun here exploring the possibilities. Always do your own research and consult with a financial professional before making any investment decisions based on our wild speculations.
Couldn't have said it better myself. All right, so to recap, Lennar is facing headwinds, but they're also making some truly audacious moves to adapt and potentially emerge even stronger.
They're not just riding the waves, they're trying to become the tide. And that's what makes them such a fascinating company to watch.
All right, folks, that about wraps up our deep dive into Lennar's Q4 earnings call. We've covered a lot of ground, from the nitty-gritty numbers to some speculative trade ideas.
Hopefully you've gained some valuable insights and maybe even a few aha moments along the way.
Make sure to subscribe to Talk Tickers for more in-depth analysis of the latest earnings calls. And remember, this is not financial advice. Always do your own research and consult with a financial professional before making any investment decisions.
Couldn't agree more. We're all about empowering you with information, but the ultimate decisions are always yours.
Exactly. So as we wrap up our deep dive into Lennar's Q4 earnings call, what's the one key takeaway you want our listeners to walk away with today?
I think the biggest takeaway is that Lennar is not just reacting to the market, they're actively trying to shape it. Their spin-off acquisition and commitment to volume in the face of uncertainty show a company that's willing to think differently and take calculated risks.
They're not afraid to make a splash, that's for sure. Whether those risks pay off is a story that's still unfolding.
And that's what makes it so exciting. We'll be watching closely to see how these strategies play out, and you can bet we'll be back to break it all down for you right here on Talk Tickers.
Absolutely. So until next time, keep those earnings calendars handy, stay curious, and remember.
Don't take our word for it. Do your own research.
That's right. Thanks for joining us for another deep dive into the world of earnings calls. We'll be back soon with more insights and analysis.
Until then, happy investing, everyone.
This is not financial advice. Always do your own research and consult with a financial professional before making any investment decisions.
Couldn't agree more. We're all about empowering you with information, but the ultimate decisions are always yours.
Exactly. So as we wrap up our deep dive into Lennar's Q4 earnings call, what's the one key takeaway you want our listeners to walk away with today?
I think the biggest takeaway is that Lennar is not just reacting to the market, they're actively trying to shape it. Their spin-off acquisition and commitment to volume in the face of uncertainty, all of that shows a company that's willing to think differently and take calculated risks.
They're not afraid to make a splash, that's for sure. Whether those risks pay off is a story that's still unfolding.
And that's what makes it so exciting. We'll be watching closely to see how these strategies play out, and you can bet we'll be back to break it all down for you right here on Talk Tickers.
Absolutely. So until next time, keep those earnings calendars handy, stay curious, and remember.
Don't take our word for it. Do your own research.
That's right. Thanks for joining us for another deep dive into the world of earnings calls. We'll be back soon with more insights and analysis.
Until then, happy investing, everyone.